Hey everybody, Boris, BK Forex. Welcome to the weekly technicals for Euro dollar, dollar yen, and pound dollar for July 3 to July 7, 2017. Kind of a very, very bifurcated week in front of us because we do have massive amount of data, very, very important event risk all the way across the spectrum, especially on the U.S. side this week. But at the same time, we also have the July 4th holiday in the U.S., so really no business gets done until Wednesday. It's going to be very much back-end loaded as far as FX goes. But in the meantime, it could be critical, especially given the very strong weakness in the dollar. So I guess it's a oxymoron. Given the very weak performance of the dollar that we saw over the last week and a half, the massive move in the euro, even the very strong move in the pound, is kind of fascinating given the fact that U.S. still remains relatively bullish on its interest rate structure. And the market's simply not believing it. I think the key takeaway over the last week and a half is how the market completely negates the whole hawkish posture of the Fed. And this week, this is going to be, I think, the more interesting aspect of it. If we start to see any kind of a wobble in U.S. data, that could really dent the big idea that there'll be any more rate hikes from the Fed this year. We've already now scaled expectations to only one more rate hike before the end of the year. And if we have any weakening of the U.S. data, sort of like the whole idea here was that second half of the year, U.S. economy was going to explode to 3% growth. Nothing of the sort is even close to reality right now. And now the assumption perhaps is that we may even actually slow down or dip below the 2% growth into second half, which would really retard any kind of plans from the Fed to tighten rates. So in that sense, dollar still remains very, very vulnerable. But on the technical side, there are some interesting things that are popping up that make me doubt that whole negative dollar thesis. So we'll take a look at it in just 1 second. But let's take a look at the calendar first. And then actually, we'll take a look at the calendar first, and then we'll take a look at the levels. So the calendar, Monday we have the ISM manufacturing. Again, ISM manufacturing and ISM services both have to stay around the 55 level for the market not to get spooked by weakening U.S. data. If we start dipping below that 55 level, it's really going to be very problematic. And then, as I said, we have, of course, the July 4th holiday Tuesday, and everything really starts on Wednesday with ADP numbers, ISM manufacturing, Fed minutes coming up, which will be retroactive, but still be interesting to just simply look at it. And of course, Friday, the very, very big event, non-farm payrolls, that comes out. And the expectations are relatively moderate at this point. We are looking essentially at around 180, maybe even 175 on the payrolls. The more interesting thing, of course, as always, will be the expectation on average hourly earnings, which at this point they're looking at 30 basis points increase versus 20 basis points increase the month prior, and that'll be critical. We need to see an uptick. In other words, if this only comes up at 20 or maybe even 10 basis points, the slowdown in the growth of earnings is the single biggest factor, the single biggest catalyst in keeping the dollar down, because that relates to rates, that relates to inflation, that relates to everything going forward. So that in many ways will be a far more important factor as we go forward. On the UK side, we have the ISM services, the PMI services report, and the manufacturing report. And that'll be interesting to see because there are reports now that actually the UK consumer is facing his or her worst condition since 1975. The high rate of inflation is eating away at any kind of consumer growth. As a matter of fact, consumers in real dollars are seeing negative wage growth this year. However, the same low pound that is having such massively negative impact on the consumer in the UK is having an decent impact on UK businesses. And the key thing here to me is if the UK business sector begins to start to crumble, then the whole powerful move in the pound could be very, very vulnerable. It could begin to unravel. So the business component of UK economy, the services, the manufacturing PMIs, all of those things that are coming up this week, that'll be an interesting look. I believe the UK services, they don't have a number on it just yet, but last month was 53.8. They're looking, obviously anything that moves closer towards the 50 level will be very troubling for the pound, and be watching it very, very carefully. Um, Other than that, Europe doesn't have any serious data set on the books. You know, the hawkish commentary from Draghi 2 weeks ago really has had a very, very extraordinary move on the euro. But we're coming up against some very key resistance levels, and that's what I want to talk about next. So let's take a look at the levels now first. You can see on the euro dollar, resistance 115, support 113 now. Dollar yen performing not nearly as badly as you would think, given the very dour performance of U.S. rates and the sort of dour performance of U.S. equity markets. And that's an interesting point. I think that's worth watching as well. And then cable, of course, breaking out about that 130. You have to respect that breakout. But I still think the 131 very vulnerable to a resistance point there. So looking at the euro here, you can see euro really, we've been talking about being bullish euro for a very long time. The runaway gap, the unfilled gap, the move through the 112 is very, very powerful move now. And really, euro very much still remains a buy to dip territory. There is certainly a lot more resistance. Let's just go on the weekly chart to kind of get a better view of this thing. You can see on the weeklies how the 115 becomes a much more serious resist point here for the euro. And I think this 115, 116 is certainly going to be much more troubling for euro bulls to overcome. But it doesn't mean that the euro is a sell at this point. It really means that I really prefer to buy the dips here. So any moves down to the 1300s probably still provide a very good buying opportunity. Euro seems to have a very hardcore support here at this 112 level effectively, and from which we broke out. And unless we break the 112 level, euro remains very much a buy the dip territory. Yen, on the other hand, this is the interesting thing about the yen. The yen, as I said, despite the very lackluster U.S. economy, not looking badly. I mean, if you look at this technically, it's really not looking badly at all. This is a weekly chart. We have a higher low, we have an unfilled gap to the upside, and last week's candle ended up almost at the weekly highs. All of this is actually very bullish technically, and suggests that even if we get a modicum of positive U.S. data, there's not impossible for us to have a move to the 114 level, which all the way, by the way, really put together, and we'll talk about this in the crosses, creates the strongest bullish case for this. I mean, look at this. This is the true monster story of the week, the euro-yen breakout, and it really suggests that we have a 130 in our eyesight as a possible move here, given the fact that both the euro and the yen are relatively strong. Cable, very strong move here. Got to give it credit. It's hard to fight this. Excuse me, fight this move. But having said this is a weekly chart. You have to appreciate it how strong this 130 resistance level is. That's a very, very big line of a demarcation, and a fall through this 130 really triggered massive liquidation, long-term support. So you would have to have some very positive UK data, followed by, and of course, let me just delete this alert here, followed by consistently more hawkish rhetoric from the BOE. I think this is the other thing. The cable really is just flying on the assumption that the Bank of England, for some reason, is willing to begin to raise rates amidst a difficult consumer environment. I really think that's an overreach here. But strong UK economic data could really push the market certainly towards the 130, 150, 132. Having said this, though, I do think this 130, 132 is going to be pretty much the top of this move, because it is a very, very heavy resistance against still a very problematic economic foundation. So that's pretty much how the week shapes up. We're certainly going to be looking for U.S. data to give us a read on how dollar yen trades. Any positive U.S. data really could push dollar yen conceivably towards the 113, 114 level. And at the same time, I don't think euro is going to suffer any kind of a serious retreat. So therefore, as I said, one of the strongest trades that you can find this week is the euro-yen, which has all the earmarks of moving towards the 130 level as the week progresses. Wish you guys the best luck, the best trading. Boris